Good afternoon, everybody. It is Thursday, November the 3rd. I'm shooting this video today from downtown Chicago. As a quick aside, I spent about 6 months of my life here back in 1998 between stints on the New York Stock Exchange. I was down on the Chicago Mercantile Exchange for a little while, so I've got fond memories of this city. Had a great lunch with a counterpart of mine over at BlackRock today. Always love hearing what they have to say. Thank you, Mike, for lunch. And we'll be seeing some clients this evening for dinner and a Blackhawks game, so I'm excited about that. But I wanted to make a comment today about Federal Reserve, the Fed rate hike that we got yesterday. So before I hopped on the plane yesterday, I told my team back in Phoenix, I said, we're going to see the markets either going to be up 500 points at the end of the day or it's going to be down 500 points. And that didn't depend on what the Fed does. We knew we were going to get a 75 basis point rate hike, which is what we got. It really depends on what the Fed is saying. So if Fed comes out with a rate increase, with the rate hike, 75 basis points, market immediately rallies about 300, 350 points or so. Okay, looks good. Some of the comments that came from the Fed, a little more dovish, a little bit more saying, hey, that the pace of these rate hikes may decrease depending on some of this economic data we see coming in. In my mind, good thing, because you're seeing housing prices, some of the biggest monthly declines in housing prices ever we are seeing right now based on what interest rates are doing. Supply chain loosening up, that's deflationary. Shipping cost coming down dramatically. Just look at the Baltic Dry Index, like down at really extremely low levels. Industrial commodities, I've talked about that in other videos, trading back to 2019 levels. You are seeing prices come down throughout the economy. Energy is kind of its own little thing going on. Geopolitical stuff, regulatory problems around that industry, but you really are seeing prices come down in big swaths of the economy. The Federal Reserve, with their comments, looked like they recognized that. Market rallies. But then what happens? Chairman Powell takes the microphone and basically hammers down with more hawkish rhetoric, saying that the Fed is comfortable pushing it further than they feel like they need to squash inflation. He's definitely channeling his inner Paul Volcker. It spooked the markets because I think the market at this point is saying, hey, these rate hikes take 6 to 9 months. If you push it too far, you're going to break something. And I think that he basically said in his comments afterwards that he's willing to take that risk of pushing it too far. The market didn't like that. What did we get? Dow closes down 500 points yesterday. Trading today is kind of mixed. So here's sort of my follow-up with that. The Fed's been right on target with what they say they are going to do. We're probably going to get another 50 basis point rate hike in December. You know, the key rate's probably going to end up somewhere between 4.5% and 5% or so. No real mystery there. But in terms of the volatility around these announcements, that volatility is going to diminish a little bit, I think, when the language from the Fed becomes a lot less hawkish. Now, when's that going to happen? I certainly can't put myself in Chairman Powell's brain. I hope he's looking at the same data that we are. They're saying that the rate increases are working. You are sucking a lot of excess liquidity out of the system. You are seeing prices declining across the board in a number of key areas. My hope is in December when we hear the comments, the Fed recognizes that. In any event, stay with me for 3 minutes. Thank you very much. If this video kind of triggered any questions, please let me know. Shoot me an email us, or call us. We'd love to talk to you more about this. And in the meantime, until the next video, thank you for watching. Take care, everybody.